joined today by Chris Reid, Managing Director of Neo Metals. Chris, thanks for your time.
Very well.
A year or so ago, we were starting the discussion about the advancement of the Barrambie Gold Project in Western Australia. How has this project developed in the last 12 months?
Well, it's been a big 12 months, Dave. So, we put our maiden drill holes in February last year. We put our maiden inferred mineral resource estimate out in June. We did diamond drilling and another 80-odd RC holes in the second half. We signed an LOI for a production joint venture with BML Ventures, so that gave us a development pathway. We announced all the results of the drilling in January, so we're currently calculating a new mineral resource estimate. It should be out in the coming weeks. We'll then publish our mining studies. We lodged a mining lease. We put our native vegetation clearing permit in last week. The mine plan, the mine development and closure plan will go in next quarter. Lots of things happening. So in a year, you've gone from, admittedly we had some more sort of walk-up start targets, but that project had nothing, and that's primarily due to us because we'd looked at it for the vanadium titanium. And so it had this massive land holding, no gold exploration. So in 1 year, we've taken it from just an exploration target through to almost development decision. And by this time next year, we hope to be in production.
What does the LOI, which you hope to turn into a binding agreement, mean to unlocking the value of this asset?
Yeah, I mean, look, you can get any mining contractor to do the job and he'll send you a bill. You've really got to focus on how you're going to get paid. So we went with BML Ventures. We've known the principals for 20 years. We work with their geological consulting business. They've done a number of these production joint ventures. Specialist mining contractors, they come in, fund the development, transport, toll treatment, and then to split the rewards, which is fantastic. So for us, what we wanted to do is to get into production while the prices are high. Like we were doing the optimizations last year at like 5,000 ounce. It's currently close at 7,000 ounce. We're very grateful to that. And so, having certainty of the toll milling solution, and at no upfront capital to us, to enable us to rebuild the balance sheet, reinvest some in sort of self-funded exploration to see what's really there, because we've got 40 kilometres to strike, and we've got gold in each of the 4 rock types. So it's a very, very big project with, it's a camp scale opportunity, but we wanted to prove that we could make money first. And this production joint venture with BML Ventures, like you said, it's an LOI. We hope to crystallise that into a binding agreement next month.
And how important is that funding opportunity to really unlock the exploration opportunity at the wider Barrambie project?
Yeah, look, I mean, it's crucial when you've got sort of 40 strike kilometres, which, is almost Kalgoorlie to Campbell. You can fit a lot of mines in there, right? And we've got a lot of prospects. So, moving in the sort of pyramid of greenfields, then growth, advanced, and then production, Ironclad goes into production. They've then got to, and we've picked out sort of 4 or 5 open pit targets we think might make the grade. We'll get into RC drilling them. And then, in terms of the greenfields, we won't start on that really heavily. We'll go back to basics, big tenure, need the geophysics, we need the geochem coverage, structural, understand why the old mines are where they are, and just give us a better vector so that we get better bang for buck.
Clearly, a lot of momentum coming into 2026. What are some of the highlights that investors should focus on?
So look, you don't have to wait too long. So new resource, put out the mining study so you can see the economics of what a starter pit might look like, a production joint venture, putting in the approval. So, our aim is to get to the stage of turning the wheel towards the end of the year. So not that long on that side of it. In terms of, some of our other assets, and we do have some really good optionality still in the critical materials. In the last year, we've inked a cooperation agreement with Rio Tinto on the commercialisation of our lithium technology that we own 70/30 with MinRes. So that's got a life of its own. We're looking at licensing them the technology after doing a demonstration plant. This was the result of 2 years piloting for them. The vanadium project that we've got up in Finland, highest grade resource from stockpiles, environmental approval, EIB approved debt financing. In December, we announced the Finnish government had awarded us a capital subsidy of 48.7 million euro. It's about 80 million bucks, which is twice my EV. The vanadium price in the US is up at about 10 bucks a pound, which is fantastic, up 40% the last couple of weeks. They've sort of worked out that previous administration was backdooring stuff from Russia through Switzerland, so they've cut that off. Defence Logistics Agency now running tenders for vanadium. That's essential for titanium alloys, so that's good. We've been looking at a project in Utah, petrolithium, and the lithium prices. We started looking sort of mid last year when the price was really low. Prices have doubled since then. We've got a very good partner. He's basically utilising old oil and gas wells to take out the lithium-bearing brine, and it's got potash in there too. So I look, near metals. We got to have a cash flow, and that's going to come from gold. Keep that going, and then the critical metals. We've been $1 billion company off the back of the critical metals. I think we can get there again.
Exciting times ahead for Neo Metals and its shareholders, Chris. Thanks for your time.
Thanks, David. Have a great day.